All right, ladies and gentlemen, we are now live. In about an hour from now, we're going to be having Jerome Powell do one of his final speeches as Fed chair. It's a big moment because it's going to be not only the moment in which they're giving quarterly projections. The first time this year, they're doing their dot plots. That's kind of the projection on where this thing is going to be going over the next year, where the rate cuts are likely to be. The board members are going to predict. But it's even bigger than that because Jerome Powell is doing one of his final speeches, then the transition naturally will begin to take place. And so he's probably going to talk about that. We're going to be expecting at least some level of either him doing dry coughs because, you know, it's kind of time for him to go. Or let's do it. Or hopefully here we get some good news for the crypto space. We got beat up today. We've been getting beat up all day. Maybe I can start slapping this up here. I took the time, I don't know if you guys have noticed yet, but I went on to Claude. If you didn't know, if you're not using AI right now, I really urge you to use AI. I understand a lot of people can't find like a reason to use AI, but I'd rather be forthcoming here and just say that you should probably be using AI. But I developed these little overlays here for the stream. So didn't take me very long. And I was like, okay, they're pretty cool. Like a little additive that we can have here. Hi, Jim. Hope you're having a great day. Hope you're having a great day. Took the doggy to go ahead and get her haircut. Didn't get time for the gym, but I'm going to do that later. And now we're going to get some rate cut news. I actually today, I'll share this. I started mining. Maybe I'll cover this right here, but yeah, no, I'm mining right now. I'm mining something new. Now, I don't want to actually cover it yet or like tell you guys anything about it. It's not like a sponsored thing or anything. It's literally just me delving into the Bitensor ecosystem more. I've been really going down the rabbit hole. I've been spending so much time doing Bitensor research. Let's see if we can point this over here. Check this out. Whoop. I think that works. Go to Zumba with the wife? Oh, really? That's great. That's great. My family recently went on a Zumba cruise. So, I mean, hey, they have their use cases. So I've got this screen here. Been following since the Saitama days. The Saitama days. Dude, that was a different time in this world. I still remember back in the day, my content flow was essentially grab one tweet and then yap about it for like 8 minutes. That was essentially what you were watching. But at that time, it felt like that's what people wanted. That's what people wanted. They just wanted me to talk about whatever in the world was coming for these cryptocurrencies during last cycle. It's a little embarrassing. Yeah, who cares? If you think about it, none of those people around you care about what you're doing. None of them care. Too many people get in their head on whether or not people genuinely care about what they're doing. Most people don't care. They're too in their head. They're worried about their own things to be concerned about whatever you're doing in real life. That's something I've learned over time. None of that stuff matters. Apparently, everybody keeps talking about the Save the America thing because Trump is saying that he doesn't want to do anything. He doesn't want to pass any other bills until this Save America Act ends up clearing through the Senate, etc. Apparently, it did get it through the first hurdle in the Senate, so we'll see if that ends up going through and we get the Clarity Act finally live. That's how you learn. Yeah, you have to be scrappy. The honest truth is, as cringe as my content used to be, and it still probably is, you have to do scrappy stuff to learn. If you don't try, you'll never get better. We had a video recently in which a bunch of people were criticizing, and they're like, "Oh, how dare you have this person on?" And I'm like, well, we have to try new things. And I don't know, this video did pretty well. So apparently enough people cared about it. But yeah, you just have to always be very scrappy and keep trying new things. Jerome Powell. After policy me rate does it. All right. So he's going to be going live at 2:30. I can remember Saitama trying to get into real estate. I know. Seda Realty. You know, I was so obsessed that I got the Seda wallet. I don't even remember what it was called. The Saitama wallet, and the first thing I bought was that real estate coin. It had no liquidity whatsoever. It was practically a rug on arrival. And I think one of my most popular live streams from way back in the day was us live streaming with Jake Gagan, who's like this influencer at the time, got hammered, like completely hammered at the event, and just started Just started like putting the camera all over the place. Like he was like one of those iPad kids in Cocomelon playing Cocomelon. He's just all over the place with the camera. He's like this. That was last cycle in a nutshell. That's literally last cycle in a nutshell. Man, we need to go back to those days. Those days were more fun. So, okay, so while his rate decision is going to be going live at 2:30, at 2 is when they're going to be giving the okay or the nay on whether or not State of Realty. Yeah, no, I know too much about it. Trust me. I covered it for some time. At 2 is when they're going to be giving the answer on whether or not they're going to be doing rate cuts. Now, I'm not trying to like make this seem like we are uncertain about what's going to be coming next. I am pretty damn certain. I am almost certain. Where is it? I'm almost certain we're not getting a rate cut because 99% I'm not going to be here talking about, oh, but Trump says Powell should do an immediate rate cut. He shouldn't wait for any more length of time. He should do his rate cuts right now. Come on. I'm not going to be here spewing BS. We're not going to be getting a rate cut this time around. As much as I want a rate cut, because right now I'm looking into houses. Yeah, no rate cut. No rate cut. And the thing, like I've been digging into houses and stuff. It's such a weird market. So many people can't sell their houses right now. I'm like, my brain, when do I buy this house? We all got scammed when housing prices doubled over the span of 4 years. I wish I would have gotten in the dip, but like, man, where I live in Miami, prices are insane. They're insane. Like a starter home, like a home that's been around for 70 to 80 years is like 500 to 600K. That's like starter baseline. You're going to have to put in some love. You're going to have to put in some love. So I'm just really having to think about what I want to do next. It's insane. Housing prices are nuts. So I'm hoping he just either dumps the housing market or says something about oil or says something about crypto. That would be great. I would love that. You in S97? I will tell you because I don't actually know the subnets by name right now. No, I'm not. I'm in 93 because I'm a creator, right? Makes sense. I'm also mining rewards. I'm on 24 and I traded 102 earlier today, but I already got out of that one. No, I'm not on 97. Just got here. I hope the day finds you well. Death Stranding, that's a vibe. Feels good. You know what I've been playing lately? I'm becoming a boomer. I recently picked up Pokemon, the new Pokemon game on the Switch. It's like Animal Crossing, but it's Pokemon. Literally, that's the only difference. I'm trying to find more games to play with the wife, so I'm like, yeah, I'm gonna get Pokopia. She loves Animal Crossing. I've also been playing a lot of Brotato recently. And every now and then, of course, I'll play some League of Legends. I'm addicted, chronically addicted to League of Legends. So you need to get your itch out every now and then. And that's my equivalent. So I was pretty excited to see this. I feel like maybe, yeah, you know what? I think you guys would find some value from this. So I'll play this too. But Chairman Paul Atkins, he's the chairman for the SEC. He went to a crypto conference and I was like, whoa, ain't that something? Ain't that something? I haven't made a video on this yet. I'm going to make a video on this tomorrow. So you guys are getting it. You guys are getting it early. But I am going to be covering, where is it? You guys are getting breaking news here. Hold on. Here it is. The S&P Dow Jones indices and Trade XYZ have joined forces, check this out, to launch the first official S&P 500 perpetual contract available exclusively on Hyperliquid. For 69 years, the S&P 500 has been a defining reference point, blah, 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 blah. Until now, access to that has been shaped by market hours. This is the big thing here. The S&P 500 perp is now available 24/7, 365. Anchored by the official index data required for deep liquidity and institutional confidence at scale. Very cool. Gross. Yeah, banks, gross. Makes me want to vomit. All right, see you later, man. It's going to make me want to vomit. How dare we talk about banks? But it's not just dope, Grizzly. It's like, that means the stock market is now 24/7. And it's not like, oh, they could have done it themselves. They couldn't have done it themselves. They didn't have the infrastructure to build a 24/7 market. They were just limited by rules and regulations. And now they're able to do that in crypto. Crypto has finally freed them. So you can trade the S&P 500 whenever you want now. It's 24/7. And the same is the same argument came with oil. Oil used to be a market where the average person could only trade during market hours. And now you can trade oil whenever you want, 24/7. Now, you can argue that, and I do need to be honest, that, because it's crypto and because it's a new market, the liquidity depth isn't as deep as maybe trading it on the stock market, which you'd be right. Crypto liquidity isn't as deep as the actual New York Stock Exchange. It's definitely not as deep. The New York Stock Exchange has existed for who even knows how long, and CME has way better depth. But the fact is, you can trade oil 24/7, and the more people trade this, which it's had billions of dollars worth of volume, the more liquidity will naturally seed into these pairs. And so maybe right now, the oil liquidity isn't the craziest in crypto, but give it a year, give it 6 months. And a lot of people are going to be trading the S&P 500 and oil in crypto, because why would they do it in traditional markets where they can't do it whenever they want? Any news catalyst, they just can't trade it. The average person is gated by a time horizon that makes no sense. Not everybody's working a 9 to 5. And even if you're working a 9 to 5, what if you can't trade during your work hours? Maybe you want to trade after your work hours. So it's ridiculous. The main meeting's at 2:30. Yeah. I made sure to include that on the bottom side here. We're starting the live stream here, starting the discussions, getting into the algorithm. It's just YouTuber shenanigans. We're doing the pre-show meet right now. At 2, they do give the projections on the rate cuts, but I mean, they're not going to do rate cuts. They're not going to do any rate cuts here. I'm not expecting any rate cuts. Probably no rate cuts. Where is this? I did want to show this since we have the time. I'm just too excited about this thing. This is the SEC chairman at a crypto event. Like, what? In the Big 26. Check this out. Check this out. I'll listen with you guys. Hold on.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stable coins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
I love that. I love the shots. I love the shots that he took right at the end. He had to get that in between. He's like, yeah, we're the cool kids in town now. I'm like, okay. All right. How you doing? XRP better than ETH and still this price you crazy if you okay, guys, everything's gonna go up. We don't need the tribalism in this space. I think we've been in the crypto space long enough to understand that there is no such thing as tribalism. We need to stick together as an industry. But yeah, they did this big document talking about how they're gonna do joint guidance with the CFTC, and they're not really gonna be doing much in crypto anymore. Protecting, I know you're saying like, oh, this guy's full of it, protecting investors. But look at Gary. Gary didn't go to a single crypto conference. He hated everyone. He just sued everyone the second he could. Don't be Gary. Do not be Gary. Don't just sue everyone just because you can. Don't do it. Paul has been all over it. All over crypto. And I mean, they've been really trying to keep integrating crypto. Can we please get... Okay, let's be honest. I don't know if he'd win. I don't know if our boy Paul here would beat Gary Guzzler. I don't know if he had a chance, but man, this guy hated crypto. He just sued everyone. He would make videos roasting us every other day. So it's nice to have someone that isn't roasting us every 5 seconds and is instead roasting the enemy. Love that. Anybody that's against crypto is the enemy in this instance. We're starting to see the crypto prices bounce a little bit. We had a bottom. I find it's just going and tracing gold right now. Look at the gold price. Look at gold. Gold's doing the same thing right now. And everything is not really directly tracing the S&P 500. Like it is a little bit, but you can't really compare these charts that well. It's so interesting though, right? So interesting. So interesting. It's not like Bitcoin is like, oh my God, we all hate Bitcoin. Now it's just like, oh, well, just everything else is going down. Kind of is what it is. What do you think else XRP will be, guys, in the end of April? Oh, I don't have my crystal ball on me, but I don't know, actually. If I could find it, I would let you know, but I can't find it right now. So I'll have to give it later when I find it. It's going to be in Netflix. Yeah, dude. All this crypto stuff is going to be on Netflix for sure. No doubt. Zero doubt about that. There's so much happening in crypto right now. I've been debating whether on this channel I should be doing only like one video a day and that's it. There's too much happening right now. There's way too much happening right now for me to make one video a day. It's like now I have to make another video explaining 24/7 stock market trading. I mean, that's insane. 24/7 stock market trading. Everybody wants to be in the stock market. And now, boom, crypto's there. And now look at this. Now I have to make more Tao videos. It's like, I'm going down the deepest rabbit hole with Tao right now. Tomorrow, actually, you know, if you're holding Tao, you're going to love what I'm about to say. Give me 1 second here. So I just tweeted this out. So if you've been wanting to ask a question, this is your opportunity. I'm going to have the privilege of interviewing a key player of the Bitensor ecosystem, Mark Jeffrey. So I tweeted a couple days ago to try to get Mark Jeffrey on the channel, and thankfully he actually responded. The Bitensor community is very welcoming community. So I've been actually spending a lot of time getting into meetings, talking to people, and I'm going to have what I think is going to be one person every single week from the Bitensor ecosystem, at least for the next couple of weeks, to get more knowledge over to you guys. Instead of me giving you a price prediction or telling you what's happening, why not just get the people actually making the needle go, you know, actually moving the needle? Why would I explain it when I can have someone that actually understands way better than me? Want a rabbit hole? Dude, there's so many rabbit holes. So many rabbit holes. Tao's going to have its ETH run next cycle. Well, it kind of, yeah, I think so. Now, I don't subscribe to the whole culty mentality where like, oh, this is the only crypto in the world that's going to go up and everything else sucks, because I hold more than just Tao. You know, I have a bias. And I've been in the crypto space long enough to become a cult member multiple times. I've had my tribulations. I'm done with that. I am done with that. As excited as I am on the things I've learned about Bitensor, I don't want to get too excited yet. I don't want to get my hopes up because for whatever reason, these ecosystems that look so promising, they just have moments where they have a lapse of judgment. So I really want to keep my expectations very low. I'm very happy right now on what's happened with Bitensor, what's happened with the subnets in my bags, of course. And I'm testing like mining. I'm doing it right now on my MacBook, you know, boom, boom, boom. But yeah, just testing. You got to explore new things. If you don't take the time to explore new things in crypto, then you're not going to win. You're going to lose. The winners are the people that take the time to learn. What do I think about Cubic? Me no likey Cubic. I like ICP. I think those are like last cycle plays for me. I would not get into ICP or VeChain at all. Like I would not touch them at all. If I would have touched ICP, it would have been last cycle after the FTX collapse because people were trading into it because of the insider trading from FTX. That's like the only thing that would make me want to touch it. I just think the cult in Bitensor is so much stronger, and you need to have those incentives to be able to keep an ecosystem running. You really need to have strong incentives. And you had to sell your crystal ball when you got liquidated. That sucks. That's the worst. When you lose your crystal ball, I mean, what do you even do from there? You got to go ahead and go back to the 9 to 5 to try to afford another crystal ball. It's the only thing we can do. Without the crystal ball, how are we going to be able to get a $10,000 XRP? It's really what we got to look into. How do we get XRP to $10,000 per coin? If we all don't sell, then technically, we can go to infinity and beyond, as Buzz Lightyear, our trading quant, has said in the past. Thank you for all your info. Of course, you're from the West Coast. I've always been East Coaster, but hey, maybe that'll change with how crazy the housing prices are here. I've been going down multiple rabbit holes. One of them has been the housing rabbit hole, and all I've learned is that Miami is wow. We are expensive. We are very, very expensive. So maybe you'll catch me in Tampa or somewhere else in the near future. Or maybe I'll just bite the bullet and just buy something over here. It's so expensive to buy a house over here. Other than Tau, what do you have? Nothing. I would like to tell you that I have other coins that I'm looking at. From what I've learned in crypto, it is better to oversimplify your life. It is much better to oversimplify your life. Because think about it for a second. If I'm exploring 70 different ecosystems in crypto, then I'm going to have a problem. I'm never going to be able to be an expert. Never going to be able to be an expert. I'm going to try to be a jack of all trades that understands everything in AI, and then I'm going to miss the boat on the biggest coins. So this cycle, I'm doing something different. I could be wrong. I just think this is part of my whole like maturing, not gambling as much thing, where I'm choosing a top ecosystem, I'm sticking to my guns, and I'm learning everything about it. And I'm going to become an expert in the top thing that's in AI. That's my plan. I don't need to become an expert in all these other little coins that are probably going to die, because all I have to do is pick a winner, stick to it, become the best at it, and catch the biggest upside as a result. That's my thinking. It makes sense. Yeah, it does make sense. Sometimes making it as simple as possible is the best outcome. It's the best outcome. And the way I think of something like Bitensor, it's like the S&P 500 for AI coins. Like it's in crypto. It's like the S&P 500 equivalent for these crypto startups, which I think is pretty cool. So we'll see where it goes. I still think the ecosystem is very early on, but you could also say the same thing for all of these AI coins. I mean, if you look at the top 5 coins, number 5 here already on this list is only worth $600 million. They're all very, very small coins. So no need. I think anything under $1 billion is gambling. Anything under $1 billion is just pure gambling, practically. Unless you really have strong conviction, they're too small. They can be manipulated way too easily. Nature Coast all the way? Yeah. I haven't spent a lot of time in Nature's Coast. I went to Cape Coral, I think like 10 years ago at this point. It was kind of boring, though. It was just like there was nothing there. But maybe it's more developed now. I would assume because of Florida's prices and the pandemic and everything that it's looking a lot better. And I could kind of say the same of where I live right now. It used to be pretty barren, but because real estate's gone so crazy, they've been doing so many new developments all over the place. So many new developments. Jerome Powell live. I think the Associated Press is probably going to have this thing. Yeah, there it is. Okay. We'll have this open. Let me close this thing. Did this shut off? Uh-oh. I think I forgot to plug in my miner. Uh-oh. Oh, shit. Guys. We might get slashed here. I forgot to get the charger. No. You have a few percent in most AIs that are good companies. That's fair. That's very fair. Yeah, that's very fair. So you're just you're doing what most people do. They put most of their port in that hit Ripple doesn't affect XRP directly. No, of course not. Do you think it does? Do you think I think it does? No, I obviously know it doesn't. The only people that think that are the people in the XRP cult. Now listen, I'm an XRP holder, but I'm not part of the cult. I do not associate myself with the XRP army. I'm dissociated from the XRP army. I think you guys are way too crazy. You listen to these YouTubers that give $10,000 price predictions. You know what my problem is with most of the XRP army? My honest problem is the people that we listen to. Think about the biggest experts in the XRP community. They're usually like influencers. What's wrong with them? Why do we listen to influencers? We should listen to major funds. We should listen to developers. Like, why are we listening to influencers for price predictions? I don't know why we do that. For whatever reason, people are interested in that, and I'm happy to oblige, but it's just not, it's not productive. We don't know anything. Sure, we have a surface level understanding of everything, but I'm not an $800 million fund. I don't know the broader picture. I don't have connections to Ripple directly. So who am I to say where these cryptocurrencies are going to go? I have my own formulated opinion and I put my money behind it, but I'm not going to be the guy that's going around and telling people to buy my course because I'm a quant that's going to predict this massive reverse carry trade that's going to happen tomorrow, even though it's common sense that, of course, if Japan it raises its interest rates, that naturally capital will flow back to it. But no, I'm a quant. I'm predicting this. I'm like, you're not predicting anything. It's common sense. It's just common sense. So I should rename this channel to Common Sense Crypto. Fucking, that's what I should do. That's really what we should be doing. It's like, I bet you're probably going to watch some YouTuber here that's live streaming this and they're going to be like, we don't know what's going to happen yet. Trump could come in and he could push Jerome Powell straight out of that chair and we don't know. We could get some emergency cuts. I'm like, no, dude, we're not going to get a cut, but we'll see what happens here. Maybe he'll mention crypto. Maybe he'll talk about the fact that he doesn't like Trump. I don't know. Like, maybe he'll talk about how he has hemorrhoids. Who knows? Who knows what he's going to talk about? But we're sure it's going to be interesting. We're at least going to get the dot plot. We're at least going to get the dot plot. I really need to get a charger for this. I really don't want to get slashed. Can you guys give me a second? I really need to get this. I'll play some music from the Associated Press so we can all be happy and I can get demonetized. But what's good, Hado? I heard you ditched the crypto gaming community some time ago. I don't like people that ditch things that are obviously going downhill. I don't like that at all. We're all part of a cult here, and quite frankly, from the way I see it, I don't like that, man. I don't like it one bit. Why aren't you shilling $500,000 market cap coins? Come on, man. Why aren't you shilling rugs? Crypto gaming, dude, same. Do you know how many hours I was putting into crypto gaming? I put way too many hours. You know what upsets me the most? The second that I left crypto gaming, our views went higher. Like, literally all I had to do was stop covering crypto gaming and everything just went up. We've only been doing better. We had our biggest month on this channel in terms of views after we left. And it's not like I left the crypto niche. Like, I'm still in crypto. It's not like I went to AI or gaming and, oh, I'm getting more views now. No, we're just actually just getting more traction. It's crazy. Nyan Heroes, what's this? Can you show we have a guest, a special guest here that's showing up here. Very important. Can you give me? Extremely important guest here. This is our resident financial analyst. She actually goes ahead and does price prediction videos all the time. This is our quant here. If you're wondering who is the one that does our research on this channel, it is our resident dogger. Dog. Can you give me a charger? The laptop turned off. Anyway, what? She's cute. Okay. All right. Little dogger. No one's looking for hemorrhoid coin. Dude, there's been many of those. No one's looking for crypto games. Yeah, no one's looking for them, man. You know, after the laptop, it turned off. Yeah. But yeah, no one's looking for them anymore. After Off the Grid decided to not launch their coin and instead launch on Binance launch, but that was nuts. The Binance launch, come on, man. Whoa, what is that? That was the straw that broke the camel's back. I spent probably 300 hours, and I know that's not a lot, but the game wasn't even around for that long, so I was struggling to build up the hours. Just playing that game because I was like, okay, that'll be my next spider tank. So I'll become cracked at this game, and I had this great KDA, and I was dominating, and I won the first in-person tournament. And then not only do they not invite me to, you just plug it in. Not only do they not invite me into their first Cash Cup because apparently I needed to talk to Web 2 people, but they just rugged the coin practically. The coin's dead. Ridiculous. At least Shrapnel's playable? Nah, man. It's just not worth looking into. At this point, I've decided that if gaming blows up, can you just find a... I believe in you. Just plug it in over there. Plug it in on that one. That one right there. Yeah, just plug it on that one. I decided that I'm just going to play video games. And if crypto gaming blows up, yeah, it could be an adjacent narrative. I'm not going to do this thing where I go down this rabbit hole and I make it my thing. I'm not. It's not worth it anymore. We've all learned it's not worth it. There's too many grifters in the gaming space. But we had to be in the gaming space to learn that. It's not only in crypto gaming, it's in gaming in general. They're all little grifters. So we just need to learn to operate in that field. It sucks, but it is what it is. Screen bigger. Not bad. Not bad. It's smart. Yeah, but it only took me how many years to realize that? That's like the enlightenment period. So my goal for this channel, Tato, is I don't want to be an XRP guy. I don't want to be an HBAR guy. I just want to be a crypto guy. I'm done. I'm done choosing communities because there's too many communities out there. There's too much happening in crypto. I don't want to be the guy that covers one thing or two things. I'm going to be the guy that just covers crypto. And so I don't care if it hurts my views short term. I'm just going to do crypto. Crypto's too small. It's way too small. And it's been going very well recently. It's all good. We learn. Yeah, we learn eventually. Hey, if you ever want to play League, I don't care what you're up to. I would play a League with you. I don't care. League of Legends, I want to play League with anybody in the crypto space. I've been playing with a couple of my fellow crypto bros or crypto nerds. I don't know why we call ourselves crypto bros. We're a bunch of nerds. Let's be honest. How do you think XRP will be treated? Well, of course it's going to be treated like a commodity because every cryptocurrency is practically a commodity now. So yeah, you're bronze too. Dude, I don't care how bad you are. I don't care if you're the worst player on the planet. We can play Brawl or something. We can play like something casual. I'm not playing competitive anymore like I used to. I'm a hyper casual because I know if I become competitive, then I'm going to spend way too much time trying to get good at this thing and every other part of my life is going to suffer. So I'd rather not do that. Instead, I'll do it with the crypto stuff because it's our income. But I'm just going to be a little casual. I'm not going to be a sweat anymore. You know how many hours I had to put in to become challenger? It was ridiculous. It wasn't worth it. It was not worth it. So I wouldn't wish it upon my worst enemy. The people in challenger are a bunch of cringe lords. A lot of them have some really bad mental health issues because of how many hours they've had to put into this. I'm going to go check on... It's already 2:03. I'm going to go check on what happened here because they should have already announced the rate cuts. Investor alert. Investors should not rely on information. Let's see here. Go to X Pro. All right, let's see what my lists are saying. I feel like X lists have only gotten worse. Fed holds interest rates unchanged. Well, that comes to the surprise of absolutely nobody, but I'm going to tweet it out anyway. Breaking. Feds hold interest rates. No rate cut. How you get your dog to plug the charger? Yeah, I had to get the little doggy. Nah, I got the wife here. The wife is here. Yo, she's clutch. Dude, I feel like I would have mental boomed very long ago if I didn't have my wife. I would not be able to go through the crypto space alone. Let's just say that. I'm very glad. And blessed. All right, let's see here. I'm gonna copy and paste this Bitcoin picture here. Boom, massive. What a cool guy. Look at him. Look at him. What a cool guy. Need to get myself all caffeinated now. So there's so much going on. Fed maintains projections for one rate cut in all right, listen, guys. Wait. We actually got something here. Let me fix this. Updating. We actually do have news here. 1 second. Things are coming fast. All right. Available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown has been little changed in recent months. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Okay. Uncertainty about the economic outlook remains elevated. Makes sense. The implications of development in the Middle East for the U.S. economy are uncertain. Well, that makes a lot of sense. The committee is attentive to the risk to both sides of its dual mandate. Okay. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Okay, that's about the same. So they held rates. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. Makes sense. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and in financial and international developments. Okay. All right. So there were people that wanted to lower it. Voting against this action as Stephen I. Moran and, they cut him off. So just 2 people. Have her say hi. Well, she's gone. She's gone. She's doing her thing. So that seems to be the FOMC statement. Okay. No, fair enough. We're still waiting for the actual live stream. Should get some more information on oil and stuff, but no rate cut. I mean, it was expected. No way crypto decline. Yeah, we're pumping right now. We're literally pumping into this. Look at this. It's like, it's what we expected. He just gives such modest takes. He was destroying us back in 22, but right now he's all right. He's whatever. Crypto's going to be way bigger next year. That's the thing. You're not wrong. Like, to the average person, you sound loony because you're saying, oh, wow, the price of the biggest asset could go up triple what it is right now. But no, it's tiny. Like, crypto's so small. The commodity ruling is positive, but XRP's real value depends on actual adoption, not just hype. I don't agree with you. I don't see the reason that XRP hit new all-time highs as a direct correlation with the amount of adoption it's receiving. I don't agree with that at all. I don't agree with that. But that's also, bygones can be bygones. You could be right, I could be wrong. Nobody really knows. But it's just, I don't agree with that. I think that speculation drives adoption. I don't think utility drives adoption. Unless it's in such an immense scale that it benefits the token. For example, Hyperliquid is a good example of utility benefiting a coin. Because of the fact that Hyperliquid is making so much in fees, they have it built into their tokenomics that they're going to be using a vast majority of these fees to actually buy back the coin. So that's why I think Hyperliquid is one of my top 5 cryptocurrencies. If you watch my video on top five cryptocurrencies, you will see Hyperliquid on that list. And that is why, because they have a flywheel in which they are the biggest decentralized exchange on the planet with the highest fees. And so they are able to do an immense amount of buybacks onto their coin. Makes sense, right? And they're the ones that actually got the S&P 500 perpetual contract. So they're the only ones that have access to the S&P 500 24/7 trading. So clearly, they're going to be getting a lot of adoption. Very clear they're going to be getting a lot of adoption. So yeah, I don't think that applies to XRP though. XRP doesn't really make money on their fees. They definitely are like Bitcoin and Ethereum, where it's the natural adoption curve of seeing the asset as valuable. That's what drives adoption. The speculation drives adoption for Ethereum, definitely. So yeah, we'll see. We'll see where it goes. Like, I think if their stablecoin goes up high enough in adoption, like we see Ripple stablecoin go crazy, then of course XRP is going to go crazy. But to say that XRP is like going to be the best performing asset of the cycle is ridiculous. It's absolutely ridiculous. You know, XRP has had its time in the sun, and it's already at $89 billion. You could see a $500 billion XRP, but anything beyond that is it's like a bit of a stretch for next cycle, probably. Unless we really see a crazy run for Bitcoin. And that's coming from someone that holds XRP. But I'd rather be someone that tells the truth than someone that just does stuff for clicks. So at 2:30, in about 20 minutes, we're going to be getting Jerome Powell himself speaking after his interest rate decision. This could be one of the final times that Mr. Powell goes ahead and talks. It could be a big moment. I don't think it will be, but it could be. Could be. So interesting. Could Hyperliquid become the go-to platform for... Yes. Yes. The answer is yes. Right now, Hyperliquid is the only exchange on the planet that's decentralized that has the opportunity to displace centralized exchanges in totality. They're the only one. Their adoption is so aggressive, and so hockey stick-like that yes, I do think so. I do think they could be the go-to platform for XRP liquidity. Now, what I will say about that is a majority of XRP holders are definitely not well-versed in DeFi. They don't really understand DeFi well. And you do need to have some sort of knowledge in DeFi to be able to interact with the XRP pairs on Hyperliquid. I'm sure at some point or another in the next year, it'll become much easier. They're going to build wrappers on top of Hyperliquid. But right now, as it stands, definitely not. But I think in the future, as it gets easier to do things on Hyperliquid, which I imagine is going to happen over the next year, for sure, 100%, it could become the go-to platform for XRP liquidity. Because adoption it's too aggressive. It's so aggressive on Hyperliquid. I'm so bullish on Hyperliquid. I'm so bullish on Hyperliquid. Like if there's any DeFi protocol that's showing the world that they can actually make money and do things the correct way, it's definitely Hyperliquid. And they understand their faults. It's not like they're a cult. They understand that they can do things incorrectly and they have to grow over time. Hyperliquid's pairs aren't as liquid as some of the centralized exchange pairs, but over time, it's just going to get stronger. Hype is overhyped. Well, a lot of people thought that, and then the price did what it did. A lot of people thought that Hyperliquid was going to magically go away, and the S&P 500 is doing things with it now. You know, it's not like it's just a random decentralized exchange doing nothing. I mean, this is the biggest players on the planet are now using Hyperliquid. And when people were flooding oil and everybody was freaking out about oil during the weekend when the war broke out, where could they trade it? Where could they trade oil? The only place in the world that they could trade oil during that weekend when the war broke out was Hyperliquid. Especially for retail traders. It was Hyperliquid. So, I don't know. I have a hard time fudding it. I have a very hard time fudding it. Like, I have a much easier time fudding something like Cardano. Like, what's Cardano? Well, who cares about Cardano at this point? Are we just holding it because we're down on our bags or because we bought into this vision 6 years ago that isn't doing anything? Yes. So why are we holding it? But Hyperliquid, I can't roast it. I can't do it. I refuse to roast it because it's actually useful. If something's actually useful, I can't say it's trash. Assuming XRP continues to gain regulatory clarity, how do I see its role evolving between traditional banking settlement systems and decentralized finance over the next 3 to 5 years? That's a tough one. That's really a tough one. I mean, I guess it depends on... everything in life is all about connections and who in DC is tapped into the XRP ledger. That's all it is, right? How do you think Hyperliquid ended up getting into the stock market and getting 24/7 perpetual contracts? Do you think it's because they're the best exchange on the planet? No, it's because they have lobbyists that made the case, and eventually the S&P guys decided, yeah, sure, we are ICE. We'll go ahead and do that. So it really depends. It's so uncertain. It is so uncertain right now. We have no answer. We have no answer because we don't know. What about those NDAs that people keep talking about? What's going to come from that? Now, I'm pretty bullish on XRP because they've done billions of dollars in acquisitions, and they have the narrative, they have the community, and they have the price action to back it, and they have the US narrative on lock. But who's to say that these banks don't go somewhere else and make their own chains? So it's difficult to see who's going to win. I think it's safe to say coins like Tether aren't going to be going anywhere. You know, these stable coins are worth hundreds of billions of dollars, and they make so much money, billions of dollars every year in fees. They're only going to get bigger. So who's to say people don't just choose stuff like USDT? It's a tough one to say. And things could change so fast in crypto. Next month, we could have a scenario in which, you know, XRP goes up 10x. What's the bear thesis for hype? Well, being blunt with you, the bear thesis for hype is that the team dumps the living heck out of the coin with their unlocks, and they stop pushing for updates on hype. As well as a scenario in which we either get some legislation that has to do with DeFi and makes it much more difficult to do things in DeFi. I guess that would be really it. That would probably be it for me. Crypto practically dies, so volume dies. DeFi gets more difficult to use because the Dems are probably pushing for it. And on top of that, the unlocks for the team come out and they just dump the living heck out of it. That's the bear thesis for hype for sure. And it's very, very real. That is a very real concern. If you're running a product and your product dies, then naturally you're going to have problems. And if your product is running, but you dump the living heck out of it, then your price action is going to have difficulty coming up. But you can also make the same argument, and I'm going to reference XRP here because it's just a company. But like Ripple, for example, the shareholders of Ripple, it's a private company. They don't want to floor their shares. They don't want to sell it because they understand that their company is going to be valued a heck of a lot higher once the bull cycle comes around. And their valuation's already gone from 11 billion to 50 billion. So I see the same scenario. I wouldn't be too worried about this until probably next year. I think the hype is warranted. I don't see a world in which it's not warranted because they're actually doing what they say they're going to be doing. Am I investing in Per? No, I'm not. I'm just investing into hype. That's it. But I'm diversified, you know. I'm like a little boomer at this point. Like, I'm 25, but I invest like I'm 90. I just get into the biggest stuff, and I don't do this over risking thing. With that being said, like if I delve more into an ecosystem, the problem with like hype is the ecosystem isn't the greatest in the world. It reminds me a lot of Solana. Like the internal hype ecosystem reminds me of Solana, and I'm not a fan at all of Solana. I really don't like Solana and the way that they do their culture. But that's just my own personal opinion. And listen, I was part of the Solana Games Ambassador program, so this is coming from a guy that was in there. It's growing fast, but can trade stocks on Kraken. Oh, something I did want to mention, now that we're on the topic, I am trying very hard to get us an exchange that is American, one, because 60% of you are American, including myself, but also very reputable. And so I have decided to take it upon myself to talk about and shill, essentially, the top American exchange on the planet, which is Kraken. You could trade stocks on there. You could trade gold on there. You could trade crypto on there. Anything you could trade on there. They recently got a FedMaster account. So if you want to make an account, I'm going to go ahead and leave the link right here for you guys to go ahead and check out. Boom. Amazing. Because I'm sick of this whole like talking about random little exchanges. I'm trying to get to the point where we can talk about the biggest exchanges on the planet, and this is part of doing that. What do I think will drive HBAR's long-term adoption more? Definitely the partnerships. Definitely the partnerships. I think due to the partnerships, it'll be easier to make the case that other enterprises should come. I already think their technology is great. Don't you agree? I think the tech is there for sure. I just don't think they're big enough yet. Like people just don't care enough at the moment, especially because we didn't have an altcoin season. If we had an altcoin season, then we would be looking at a totally different world. But good for them. They got FedEx, right? That FedEx is a pretty big one. Good for them. Very good for them. Stop buybacks and people go to a new platform? Yeah, for sure. 100%. They got to keep being aggressive. But if it works for them already, why would they change that? Greed would kill them, but are they going to be greedy? They probably are going to make tons of money. They don't really need to be that greedy. So we'll see. And that's with every crypto company, though. You're still taking a risk no matter what. You're taking the risk that the Ethereum Foundation continues to religiously dump every single time they get any sort of cash, which they continue to do that every time. You're taking the risk that the Bitcoin core and the community surrounding Bitcoin that's developing it further continues to dump Bitcoin, which they do. They very much do, aggressively. You're taking the risk that XRP and their escrow continues to be dumped religiously, which they will continue to do that. And you just take the same risk with stuff like HBAR. Like HBAR Foundation is also dumping anytime they get capital. It's just, that's the name of the game. So the same is probably to be said with stuff like Hyperliquid. They're going to be dumping. They're going to be dumping for sure. If you had billions of dollars there just sitting, of course you'd take it eventually. It's just, will they do it responsibly? That's all we can really ask for. So we should be getting in the next 10 minutes, Jerome Powell coming up here. It's coming pretty soon, so we don't have to wait too long at this point. We're expecting him to talk about the Middle East conflict, how that affects inflation, maybe a word about oil. I'm hoping he talks about crypto, but I'm not going to have my hopes up. A great way of finding what he's probably going to talk about is looking at prediction markets. So let me actually check out prediction markets right here. All right, so he's probably going to say good afternoon. He's going to say inflation a lot, dollar, gold. He's going to talk about oil. He might cough. Yes, seriously, guys. That's what I'm looking at right now. Okay, he might talk about affordability. Good afternoon. Volatile, housing. He's going to talk about the housing market. Okay, I'm interested. I am interested in that. Probably not talking about China. All right. Crypto is not going to come up. It has an 8% chance and it's dying. So I guess no crypto. Jerome Powell's never been a crypto bro, so it makes sense. I imagine Kevin Warsh is going to mention crypto though, for sure. Kevin Warsh is bullish on crypto. He's been very public on his crypto bullishness. Very bullish on crypto. Yeah, he's probably going to mention gold. All right. So you got that coming up. And then what else? Explain to us how our grandma can get started on Bitensor. Okay. Yeah, this is great. That's great. Yeah, we got about 8 minutes now. Do they have a song? They always get me with the DMCAs. So I'm not going to bother there. Make sure we're smashing the like button, getting the word out there. I'm just monitoring the situation to see if anything new comes out that might be interesting. It seems like that's kind of it at the moment. There will be person. When all your friends been to the chosen one. All right. Excited though. It looks like the markets are beginning to have a bit of a bounce. It's looking uncertain though. It's not looking the greatest. I can't trade this market. Who is trading in this market? Are any of you trading this market? Be serious. It's hard to trade this market. I was doing some trades and I got a portfolio from 10K to 17K in like a month, right? Oh, Jesus is such a quant. But then I closed the trade at about 12,000 and I've just been holding it there. Like, yeah, I'm still up 20%, but I've been having a lot of trouble finding entries. Like, I can't find entries. Impossible to find. This is such a difficult. There's no confluence. Everybody has different perspectives on what's going to happen. So I don't know how to trade this. I'm having a lot of trouble trading this. Like I kind of gave up low key trading this. One moment we're up, and the next we're down 10%, and then we're up again 10%, and we're going sideways. And we get info from prediction markets, yeah. Even though they've grifted me, I will never use Kalshi for the rest of my life. I don't care if they offer to pay me. I don't care how much they offer to pay me. The fact is, they owe me $3,000, so I will never use them. It's a matter of principle. I would never use them. Just bought Bitensor, Hyperliquid, and Bitcoin. Yeah, fair. See, that's what you got to do. What you just said, that's perfect. And keep that mentality. Don't change it just because the prices go up. Don't change it. That's beautiful. What you just said is beautiful. You're essentially doing what I am doing. I'm happy to share what my top 5 cryptos are. Where is this? And I've changed my whole investment thesis drastically. Like back in the Haddo days, I was going into 50 different coins. I'm done with that. So I made this video. It's top 5 crypto for 2026 before it's too late. I made this. Look at what a casual little thumbnail. No 50x, no 100x, just These are my top 5 cryptos, and that's it. I love that. So excited about that. The Hado days were crazy. Yeah, we were all crazy. We were a little degens. But look at this. So Bitensor, I talked about it. It was at 222. This was 4 days ago. Now I was saying the Hado days, man. That was the crypto gaming days. But no, like Bitensor was at 222. What else am I in? Hyperliquid was at 3750. Ethereum, Bitcoin. Like I'm such a boomer now. I'm just getting to like the safest things in the world. And I have an XRP bag as well. This is a TLDR of everything, and that's it. Premier Dex, AI King, US Champion. We have BlackRock that's going to pump Ethereum with Tom Lee, and Bitcoin. That's it. That's like oversimplified. Aave over Arrow. Yeah, Aave had a bunch of FUD recently because someone lost like $50 million on Aave doing a swap. I don't know about Aave. I'm not gonna lie. I used to be more bullish on Aave. These days, since Hyperliquid came out, I have a feeling that there's going to be a lending protocol that's going to come out that's more competitive than Aave. I think at some point or another, people might not use Aave. It's weird. I feel uncomfortable saying this because I've always been like, oh, people are going to go borrow on Aave forever. But they've been making some big mistakes recently. So I don't know. I don't know if they're going to be using Aave forever. So we'll see where it goes. I don't own Aave anymore. I used to. Trading subnets is fun to pass the time. Yeah, I was doing that a little bit. I was trading that one that partnered with Shoots, and then I sold it. So I flipped that one. That was a little fun. But that's like we're doing pump fund stuff a little bit too much. I think a little bit too much meme coin gambling. It feels like these little subnets are tiny. They're very tiny. So I don't know. I'm probably just gonna wait and see what happens. I'm already up a lot on some of these subnets. I'm not gonna lie. And I joined 2 weeks ago. I'm already up a lot. I guess my entry timing was really good, but I'm already up a lot. I don't need to complicate this at all. I don't need to gamble on lower market cap subnets. It's not necessary. All right, we're gonna have Jerome Powell, the legend himself, speaking pretty soon here. I think I have a graphic here. Boom. When the man, the myth, the legend comes up. Do you have a... Boom, 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 boom. Big boom. So many messages recently. All right. 2 minutes before Jerome Powell comes here and begins to go ahead and speak his wise words for the market. Very wise, very wise. Okay. We have PBS News. They might be faster. Oh. Yeah, I'm gonna do them instead. I think PBS will be faster. At 2:30 p.m. Perfect. All right. Pump my bags, please. I don't think he will, but let's get it. You don't own it? Yeah, that's fair. Yeah, there's a lot of opportunities to trade on Bitensor at the moment. All right. Here we go. I'm going to start putting this on. We're talking soon. Yeah, they move very fast with bots. All right, boys.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the SEP, can you help us make sense of why there is still a bias to cut from most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction that to your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And you also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid. And inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past about.
So there'll be an offset.
Offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment, and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations. And so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And, I think it's important that we do that, very important.
Nick.
Nick Timoros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers, on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks. And we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. We feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely. A ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core inflation, 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you will all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. In a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So, we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero. But nonetheless, it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common? And does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So.
I'm sorry, I have to pause it. He's like one of those YouTubers that are doing apology videos, but they're not actually apologizing for anything. They're just always beating around the bush. This guy's saying nothing. He's saying absolutely nothing. He's like, oh, we're worried about the tariff situation and maybe the oil and maybe this, but we don't know. It's like, pull out the crystal ball. Tell us something. It's like, this old fart is done. Why do we have 700-year-olds here? These are like centurions that are in our government mandating what we're doing. Listen, I'm 25. What's up with this? This guy's like 700 years old. I'm sorry. I had to pause it. I'll keep going now.
We didn't really make any changes on that. I had hoped that I had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be. There are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens. And it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case, we're going to learn a lot because we're going to learn 6 weeks to the day till the next meeting. And, we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023 when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. And so I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is, our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history. And then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the in the wake of the court decision. But the administration has said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States anywhere in the world, in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices, so your question there is, are we concerned about it? I mean,
How concerned, and whether or not it will drive up, you know, the cost of food and other goods that really rely on it to
so
move
I think
across the
it's a
country.
more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but you know, we're right at the beginning of this and we don't know how big we just don't know how big this will be and how long it lasts. You know, it may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
Archie, for the last question.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. You know, we actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of, you know, generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time, and so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side? And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
He should do the Biden thing where he looks back, just aura farms before he leaves. Well, all right, let's go over some of the stuff that he said. So Fed Chair Powell says rate cuts will not happen without clear progress on inflation. Powell says he would serve as Fed Chair pro term if no successor is confirmed. What do you know, Jerome, right? The Fed leaves interest rates unchanged, and that was a sleeper. He just said he didn't know anything. He just didn't want to give any decision. I guess it is uncertain, but man, like no direction at all. It seemed pretty bearish. It seemed like we got less projections on rate cuts than we thought was coming, and Powell doesn't want to leave, apparently. You can characterize the rate as in the high end of neutral. If there was ever going to be a time to skip producing, this would be it. If we don't see progress, you won't see a rate cut. 4 or 5 people went from 2 cuts to 1 cut. And then he said nothing about the Middle East. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the rise in oil prices caused by supply disruptions in the Middle East. Job gains have remained low. Labor demand has clearly softened. The median projection of the unemployment rate is 4.4%. And okay, so big old nothing burger, my friends. A big old nothing burger. We love a good nothing burger. Yeah, I was kind of falling asleep there. Not gonna lie, I actually already made the thumbnail for the next video I'm gonna make. You know the guy that was talking about how I make 20 videos a day? Listen, I'm already ahead of it. I'm already ahead. I'm so ahead. I already got the thumbnail done. I already got most of it done. Listen, I'm going to have a video out in probably like the next hour. So what's the point of him if he doesn't know anything? Well, he does know a lot. He just doesn't want to say anything. I hate politics. The one thing I hate in this world is politics. So there's always a political agenda with all of this. Whether or not he likes Trump, whether or not he hates Trump, whether or not he wants to make him look good coming into a midterm. You know, if the economy is weak into a midterm season, then it looks good for the other side, and vice versa. There's always a political agenda. And listen, I couldn't be bothered to talk about politics because this is a crypto channel, but it's annoying because they're just going to be holding back our crypto bags because it benefits them. So it is what it is. I'm gonna get this video out. I'm gonna work on it. But thank you all so much for tuning into the live stream. It was really fun. I even grabbed the pillow because I was quite literally falling asleep. I have TikTok brain syndrome. Like, if there was shaken baby syndrome for Gen Z, it would be TikTok brain syndrome. I have to be doing something at all times. So I already got most of this stuff done. But I'll see you guys later. Peace. See ya.